you tired of paying too much taxes every year? Did you know that there are legal ways to minimize your tax burden in the US? With the right deductions, credits, and strategies, you can significantly lower your tax bill and keep more of your earnings. Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we'll talk about the 14 valuable simple strategies on how to legally minimize your taxes in the US so you can hold onto more of your hard-earned money. I suggest consulting your personal accountant, but if you don't have one, I hope this information can assist you. Before we delve into the details, if you save money in our tips, please treat yourself or someone else. This video is for those earning less than $400,000 annually and offers legal ways to minimize your taxes. There are no loopholes or magic tricks to eliminate your taxes, but you can save money by employing lawful tactics. This video does not condone illegal tax evasion. Let's begin. The 14 simple strategies to reduce your tax burden in the US. Number 1. Commuter Benefits. Take advantage of commuter benefits if offered by your employer. In 2023, you can spend up to $300 per month tax-free on commuting expenses, including mass transit, ride-sharing services like Uber or Lyft, parking meters, garages, lots, and more. This means you could save up to $3,600 in taxes annually. Number 2. Retirement Plans. Take advantage of retirement plans offered by your workplace, such as 401k or 403b. 401k is for profit companies while 403b is for governments or nonprofits. By contributing to these accounts, you reduce taxes this year and save for retirement. These are popular retirement plans, but other options exist. Number 3. HAS. Health savings accounts are available to people with high-deductible health plans. By contributing to your HSA, you can lower your taxable income, which is a tax deduction. It's like a savings account for health expenses, and if you spend the money on qualified medical expenses, you won't pay taxes on it. You can also invest the money in your HSA and earn tax-free interest. Number 4. FSA. Flexible Spending Accounts. An FSA is a flexible spending account that lets you pay for healthcare expenses with pre-tax money. But be careful, there's a use it or lose it rule. If you don't spend all the money in your FSA by the end of the year, you lose it, unless your company allows you to roll it over. Number 5. Dependent Care FSA. A dependent care FSA allows you to pay for child care expenses for your children or adult dependents with pre-tax money. It covers various expenses such as daycare, nannies, and preschools. Number 6. Capital Losses. If you have cryptocurrency losses, make sure that you report them because they can lower your taxes. These losses are tax deductions. When it comes to stocks, you will get a tax form called the 1099-B, and your stock losses will be included on it. So it's difficult to miss or forget about your stock losses. Number 7. Long-term capital gains. If you keep a stock or crypto for over a year before selling it, it's considered a long-term capital gain. These get a more favorable tax treatment, with rates about half of regular taxes. If you're below a certain income level, you may even pay zero taxes on your profits. Number 8. Review your 1099-B tax form. The 1099-B is a tax form that you get from your brokerage account, such as Robinhood or Ameritrade, to report your stock market activity at the end of the year. You can download it from your account's tax section. Check the form for any errors or missing information, especially the purchase and sale prices. The most common mistake is not showing the purchase price, which makes it seem like you bought it for $0 and could result in paying more taxes than necessary. Number 9. Margin interest. Make sure to deduct your margin interest, as it can be claimed as an investment interest expense, which is listed on your 1099-B tax form. Number 10. Gambling losses. It's important to know that if you win a significant amount of money at a casino, you'll get a tax form called W-2G, even if it's just a few $1,000s. The casino will send a copy of your winnings to the IRS. You need to report these winnings on your tax return to avoid getting into trouble. However, you can reduce the taxable amount by deducting the money you lost on gambling activities like table games, sports betting, or slots, and horse racing. Number 11. Traditional IRA. Earlier, we talked about retirement plans like 401k or 403b, which are offered by your employer. But there's another option called traditional IRA, which you set up outside of work. Depending on your circumstances, you may be able to get a tax deduction for contributing to your traditional IRA. So don't forget to consider this option. Number 12. 529 Plan. If you plan to save money for education, you can use a 529 plan for yourself, your child, or anyone else. While you won't receive a tax deduction from the IRS for contributing to a 529 plan, you may be eligible for a tax deduction on your state income taxes. Note that not all states offer this deduction, such as California, and some states don't have state income taxes, like Texas or Florida. Number 13. Fix your W-4 payroll settings. If you often end up owing money to the IRS when you file your taxes, you might be charged an underpayment penalty without even realizing it. This penalty is included in your tax return, but many people miss it because it's automatically added to the amount due. To avoid this penalty, you need to adjust how much tax is taken out of your paycheck by updating your W-4 form with your payroll department or in your payroll settings. Number 14. Minimal rental. If you rent out your home on Airbnb or a similar platform for 14 days or less, the money you make is tax-free. This is called the minimal rental use rule, but you need to report it correctly. If you don't, you could end up paying unnecessary taxes. Make sure to inform your accountant or look up the rule yourself. I hope this information helps you save money on taxes. Make sure to inform your accountant or look up the rule yourself. I hope this information helps you save money on taxes. If it does, feel free to treat yourself or someone else. We acknowledge that paying taxes can be a daunting task, but it is crucial to fulfill our civic responsibility while also ensuring that we retain more of our hard-earned money. By adapting the techniques we've outlined, such as capitalizing on deductions and credits, investing in tax-advantaged accounts, and planning for taxes in advance, you can effectively reduce your tax liability and maximize your income. Remember, it's important to seek the advice of a certified tax professional to ensure that your tax approach adheres to current laws and regulations. With the appropriate direction and knowledge, you can manage your finances and optimize your resources. We appreciate your participation in this journey towards financial success, and we wish you all the best in your future endeavors. Please share your thoughts in the comments below and conduct your own research before making any investment decisions. That's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.